So today I'm going to spend a little time with you describing some of the do's and don'ts of the loan process and how to make the loan the most successful experience. We've all heard friends and family say, oh my gosh, so much documentation was asked of me, it felt intrusive, I did things that were later told I shouldn't have done. So I want to spend a little time of kind of setting the stage of what a really good loan application looks like. In a perfect world, you've been in your job for over 2 years, or you have continuous employment for 2 years. We're looking for all the documentation to submit a complete 2-year work history. We're also looking for the last 60 days of all asset accounts. So if you get bank statements once a month, we're looking for 60 days of activity. On the asset side of the picture, we want to make sure that all the money that you're using for the home loan process is documented, which means if you got a gift from a family member, if you are transferring money between accounts, if you're getting a gift from someone not related to you, all of those create questions in the loan process that may feel intrusive, but because we have to meet federal guidelines from a lending perspective, it's really important that we talk about it before you make any of those big moves in money so that we can help give you direction. There are certainly ideal ways to transfer money or receive gifts which are less intrusive or might be an easier process for you than another way to do it. So we are here for you to help you through that process, and the best way to do it is to have open communication. The final piece is credit. So credit reports are good for 90 days. If you apply for new credit during the loan process, underwriters and technology have ways of knowing that. So please make sure that you disclose to us any new debt that you've taken out on behalf of your family. It doesn't necessarily mean that you can't get approved, but we do need to include those monthly payments in your qualifying debt to income, which is debts versus how many monthly debts you have versus the income that you have per month. That being said, credit scores also affect the type of loan program that you qualify for and the interest rate that you receive as part of the loan approval. So it's important that if we pull your credit, that you maintain payment history, balances, and credit profile to maintain the credit score that you were approved with. If for some reason, we know that we're all human and life doesn't stand still in this process, you need to make large changes in your family's profile as far as jobs, credit, or assets, that you just let us know and we will work with you and try to give you the best direction we can to maintain the loan approval that you currently have.